Riding the roller coaster, understanding stock market volatility. The stock market is like a roller coaster. It has its ups and downs, twists and turns. This constant movement is what we call volatility. Just like on a roller coaster, volatility can be thrilling for some and terrifying for others. Imagine you're at an amusement park. You see a roller coaster with people screaming and throwing their hands in the air. Some people love that feeling, the adrenaline rush of the unknown. Others, they'd rather stick to the Ferris wheel, a much calmer experience. The stock market is the same way. Some investors thrive on volatility, seeing it as an opportunity to buy low and sell high. Others get spooked by the drops, selling their stocks in a panic and often losing money in the process. The key to mastering the market is understanding that volatility is normal. It's part of the game. Once you accept that, you can start developing strategies to manage it and even use it to your advantage.
The why behind the wild ride, causes of market swings. So, what causes all this up and down movement? Why does the market seem to have a mind of its own? Well, the truth is, the market doesn't think, it reacts. It reacts to a whole bunch of things: economic news, company earnings, political events, even natural disasters. Think of it like a giant game of tug-of-war between buyers and sellers. When more people want to buy a stock, the price goes up. When more people want to sell, the price goes down. Sometimes this tug-of-war gets really intense. A piece of unexpected news hits the market, and suddenly everyone's running for the exits. Or maybe there's a surge of optimism about a new technology, and everyone's scrambling to buy in. That's when you see those big swings in the market.
Keeping your cool: how different investors handle volatility. Now, how investors react to this volatility can vary widely. Some investors, let's call them the day traders, live for this kind of action. They're constantly buying and selling, trying to make a quick profit off the market's short-term movements.
Then you have the long-term investors. These folks are more like marathon runners than sprinters. They're not fazed by the market's daily ups and downs. They're in it for the long haul, investing in companies they believe in and letting their money grow over time.
Who comes out ahead? Well, it's not a one-size-fits-all answer. Day trading can be incredibly risky, and most individual investors end up losing money. Long-term investing, on the other hand, has historically been the most reliable way to build wealth in the stock market. Section 4. Your game plan: practical tips for navigating the market. So, what's the best way to navigate this wild world of stock market volatility? First things first, don't panic. Easier said than done, right? But seriously, keeping a cool head is crucial. Remember, volatility is normal. It's not the enemy. In fact, it can be your friend if you know how to handle it. Here are a few tips. Stay informed, but don't obsess over every market fluctuation. Diversify your portfolio. Don't put all your eggs in one basket. Section 5. Mastering the ups and downs: risk management strategies. Next up, let's talk risk management. This is all about protecting your hard-earned money from those big market swings. One of the best ways to manage risk is diversification. Don't put all your money in one stock or even one sector. Spread it around. Think of it like this: if you invest in a bunch of different companies across different industries, all their stocks are unlikely to go down at the same time. Another important risk management tool is setting stop-loss orders. This is basically like setting a safety net for your investments. You tell your broker to automatically sell a stock if it falls below a certain price, limiting your potential losses.
Section 6. The long game: volatility and the power of time. Here's the thing about the stock market. The longer you stay invested, the less volatile it becomes. That's right, time is your greatest ally in the market. Think of it like planting a tree. In the beginning, the sapling might sway in the wind, but as its roots grow deeper and stronger, it becomes more resistant to storms. The same goes for your investments. The longer you hold on to them, the more time they have to grow and weather those market storms. So don't let the roller coaster of volatility scare you away from the stock market. Embrace it, understand it, and use these tips to make it work for you. Remember, in the long run, slow and steady wins the race.